Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com, founded it 22 years ago, way back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and my passion, which is mechanical trading systems. Got a lot here to offer Breakpoint Trades. If you're not a subscriber, you should consider subscribing. I think you'll love it. And if you're just a YouTube subscriber, at least please subscribe, like, comment. Helps out the channel. Okay. Got a lot to discuss here. It's been about a week since I did a YouTube video. Again, guys, that's another reason to become a subscriber, because since that time we've had many different newsletters for our subscribers, trade ideas, system alerts, stuff like that. But anyway, this is an entry market update, technical analysis review of the markets, sectors, commodities, crypto, and trading systems. It is currently Monday, August 11th, 2025. Okay, and let's get this puppy started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, August 11th newsletter. Tonight's newsletter, as you can see, divided into 8 major sections. Same theme as I generally keep. First off, discuss the general market, the goings on, news, stuff like that. I'm also going to make a couple admin comments on some of our systems, our mean reversion systems and KISS trend following systems. They've been pretty awesome. Then we're going to review the general market indexes from a top-down approach. We'll review bonds and a few market indicators. We'll look at a few select sector charts, not too many. Steve covered the vast majority on the weekend, so no reason to overdo that. We'll look at a slew of commodities, currencies, US dollar, crypto, of course, Bitcoin, Ethereum, precious metals, gold, silver, platinum, GDX, a few mining stocks that I put out a couple weeks ago, and we'll review some recent trade ideas. I did not add any new ideas this evening. And again, guys, as you know, as far as the market has done what it typically has always done. It has held up very well during this earnings season. It has rallied nicely since beginning of July. And again, that's generally what markets do. They generally hold up and rally into earnings, and that's been no exception this time. Of course, have been the large cap tech stocks that are primarily leading. That's why we're seeing, the equal weighted indexes like the S&P equal weighted and NASDAQ equal weighted have not made new highs. Okay, it's because all the action has been in these big cap tech stocks, and of course lately some of these, beta stocks. All right, this week though, before I get to that, like I said, respect trend until it changes, but we are starting to get to the very end of the earnings season. We got more this week, but it's really tapered down, so there's not going to be much over that. But otherwise, guys, the big ticket items this week are the CPI, PPI inflation data. So that is Tuesday, we get the CPI 1 hour before the market opens, and PPI, that's producer inflation, we get that on Wednesday. Now, the market typically doesn't care as much about the producer inflation, but the CPI is a big one tomorrow on Tuesday. And of course, we have retail sales. Again, these will be the most influential items for the markets this week. Not so much earnings that have been, the big focus over the last month. And as always, guys, follow your plan. You need to have a plan when you trade the markets. Next, since I am doing a YouTube video here, I'm just going to do a follow-up since my last video just about a week ago. So if you, again, on YouTube, remember I was discussing these mean reversion systems, and the exhaustion shorts closed out beautifully over a week ago as the market closed below that 20-day moving average. Again, after it closed below the 20-day moving average, the markets then rallied again to test the highs. The NASDAQ made new highs. The S&P has not yet, but remember, the S&P was in that rare condition where it was trading above the 20-day moving average for 66 days, with the second longest in history. So that short ended up closing out nicely. Again, our subscribers were alerted well over a week ago. And also at the same time on that day, that was a Friday by the way, 2 mean reversion systems triggered along. The trend pullback triggered on SPY and ES futures, and they also closed out nice winning trades, as you can see. Again, Breakpoint Trades subscribers are well aware of this, but just doing a follow-up for you YouTube guys. And image number 3, Here is the KISS systems, and I've been showing these mean reversion components that I've added to the KISS systems. I really think this is, I hate to use word holy grail, but it's really the best of both worlds, because you get, remember, the KISS systems are designed for trend following. They do a damn good job. They're one of the most popular things on Breakpoint Trade's website. You can see the Qs daily and the SPY daily. You can see how they both went long essentially on April 7th on that big up bar, set a stop at the lows, and simply have been trailing or stop up all along. They're still long, so they've caught this whole rally, these KISS systems, as you can see. But I added a while back these mean reversion component to the KISS systems. And you can see here in the Qs, you've now had 4 winning trades in a row. One actually closed out today, so just over a week ago. It bought that dip and closed out nicely. The beauty of the mean reversion systems with a KISS is that should price continue to go down, your stop is simply the smart trailing stop. So had the market continued selling off, it would have simply stopped out at that 548.70 smart trailing stop. Okay. And on the SPY, same deal. It closed out today as well. Smart trailing stop here for the SPY is basically 615. These are something that I'm going to be possibly looking to bring to the website. I have not decided how I'm going to do it yet, but I really love this concept. Basically the combination of trend following and mean reversion. Awesome sauce there. And item number 4, again, for those of you who are subscribing to Breakpoint Trades, just have a standard membership. There's still quite a few of you that don't have the KISS subscription, and I'm kind of wondering why, because you're really missing out on a lot of stuff here. So I just took a screenshot from the KISS section, the high performance, and you can see all these awesome gains. These are live trades. These are real trades that you'd have been notified via text message to your phone. And again, the market's obviously had a great uptrend since the April 7th lows, but that's the beauty of the KISS systems. They'll catch those moves like that. And you can see great stuff here. Palantir's up 37%, Nvidia 67%, so all kinds of good stuff. And if you're just a YouTube subscriber, the KISS systems are a great way if you want a completely automated way to trade. They will send you text messages, emails. You can simply follow the trades, as they enter the trades. They tell you where to put the stops and when to exit. So good stuff here. Systems have done a damn good job here. Next. Let's get back to the general market at hand. So item number 5 shows the index sector, what transpired today. And you can see we did have a pullback today in the market, with the major indexes down about 0.5% or so. Well, Dow was down about 0.5%. The S&P was down 0.25%. Same for the NASDAQ roughly, while the Russell 2000 was essentially flat. Okay. Again, tomorrow, Tuesday, we have the CPI inflation numbers. That could spike the market either way, either get a quick spike to the upside or the downside. Really just flip a coin, guys. If inflation does tick up, I think it'll be taken as a negative. So we'll see how it looks tomorrow. Economic numbers have been strong, earnings have been okay, but will we finally start to see some inflation come in here? We'll see. All right, the market is kind of priced to perfection right now. It is already priced in the anticipated rate cuts, and I think it's priced in 3 of them for this year. So we'll see what the CPI looks like tomorrow. As far as the market sectors here, the 21 sectors, the majority were down, as you can see here. No real big moves here, though. Most were less than 1% or so. Currency-wise, U.S. dollar up 0.4% today. Remember, I've been looking for a higher low. Cryptocurrencies, they had a nice pop on Sunday, but they ended up putting in a high before pulling back, both Bitcoin and Ethereum. Commodities, kind of a mixed bag here. The index was slightly up today. DBC 0.14%, while crude oil up 0.7%. Otherwise, natural gas continues to get sold down. Copper, uranium, agriculture was up. Coffee had a big day, up 6.2%. I'm not showing a chart of that tonight. And precious metals were all to the downside. They got smacked. Remember, gold's still in that coil pattern, so sold off once again inside the coil, down 1.44%. Silver down 2%. GDX, the miners, down 0.6%. So they're still holding up better than the metal. And as far as the bond market, little pullback in the 10-year, 30-year Treasury yields. Okay. And next, item number 6 shows the economic news calendar. Like I said, tomorrow, Tuesday, we have the CPI inflation data, and Wednesday is the PPI inflation data for the producers. And on Wednesday, then we have retail sales. Remember, we're mostly through earnings season now. Okay, let's look at the index chart. So chart number 7, here is the daily snapshot of the 5 key major indexes. Remember, the Dow never did make a high, took out its highs. It basically stalled at its February, January, and December highs. Over a week ago, I was talking about the Bollinger Bands were pinching, and we got that initial pullback where those exhaustion short systems closed out for a winning trade. Then we've had a nice move up since then, kind of a little V move. The S&P has not taken out its recent highs, while the NASDAQ slightly did. The Russell at the bottom here obviously is a little weak too. Next, item number 8. So moving on to the S&P 500 chart. So first off, here's the KISS daily systems. I already discussed some of these. The SPY KISS system up here at the top, the combo, closed out nicely today, the mean reversion. So another winning trade there. The system's still long, of course. The main core trade from the April 7th low there where it went long. You can see how many times it's raised its smart trailing stop. Current smart trailing stop's right around 615. And as far as the S&P 500 cash, now this one got out. So this is in cash. It got out about a week ago on that pullback. So it is in cash, guys. You could also see those mean reversion trades inside the main trend, which made money. But again, the cash S&P cash is flat while SPY ETF is still long. Next, item number 9. These 4 time frames, these are custom indicators, the cycles and the ATR, DeMarks, stuff like that. So on the daily here, you can see how we've rallied back to the underside of the ATR. So it's possible we could find resistance here and pull back. We'll see how this reacts tomorrow. Obviously on all the lower time frames, we broke through those ATRs. Little DeMark 9.5 day. Again, ATR is your support on a pullback. Again, we'll see the reaction tomorrow on the CPI. Next, back to the standard chart. So chart number 10, here's that daily S&P chart I was showing, a week ago. And again, at the time I was labeling this high as potentially a wave 3 of 5. Again, you can see I have it marked here again. So should we make another high, then this simply shifts over. Remember, guys, I talked about that we're either going to have that deeper wave 4 pullback on that first pullback, or it would be a very shallow micro wave 4 and we'd rally to a new high, shift the wave 3 of 5 out, which may be occurring again should we make another high. Remember, the NASDAQ already did. And again, ultimately, though, eventually we are going to have this wave 3 of 5 confirmed high, and eventually we're going to have a deeper wave 4 pullback. Okay, we are through most of the earnings season, so there's a lot less that's going to hold the market up, but we'll see the reaction tomorrow. Short-term support's kind of the 20-day moving average here. Another thing, the 60-link stochastic here at the bottom, on that pullback a week ago when it fell below the 20-day moving average, when those mean reversions shorts closed out, you can see how the 60 stochastic essentially bounced off the top of the 80% level. So that's embedded. That's a momentum condition. I've talked about that many times. So that's still holding. Now, when that eventually breaks, that'll be something to point out. But we're still in this momentum condition, and it bounced right off of that 80% area. Next. Chart 11, here's the half-day chart. Again, we have yet to make a new high on the S&P. So far, got a lower high at the moment. Again, this could be remedied right tomorrow. Otherwise, guys, just keeping it really simple. We haven't broken any market structure or anything. So the last higher low here on this time frame is the 62, 13 area. So otherwise, we've simply made higher highs, higher highs, higher highs. So when we finally break market structure, that'll be something much more important. But we have yet to do that. We continue just to make higher highs. Haven't made a higher high on this time frame yet, but we've made higher lows. Next, chart number 12, here's a 2-hour chart. Again, we bounced off that demand zone as well on that pullback into early August when we pulled back below the 20-day moving average. Here I just show a simple uptrend channel. Now, as of yet, you can't count this impulsively, unless it's a nested 1-2-1-2, but we'll see if we continue to hold this channel or not tomorrow after the CPI. Next, chart number 13, here's a 60-minute chart, just simply shows the same thing. By the way, these shaded areas, these are open gaps. They like to be filled eventually. So we do have, if we break this channel, we have an open gap here to watch, and of course way down here. But we have yet to break this little channel. We haven't taken out the highs either. Next, chart number 14, here's the S&P equal weighted, and this is something I showed a couple weeks ago, but this never did make a new high. It simply got a double top here. Remember, this weights all 500 stocks in the S&P 500 equally instead of, so those FANG type stocks like Meta and Microsoft, they don't skew these index. So anyway, it just shows you how much effect those have on the indexes. So this did not make a high. Right now it's near its 50-day moving average. Chart number 15, here's the weekly, of course. You had simply had a kind of a double top area there a few weeks back where it pulled back from. Next, chart number 16, here's moving on to the NASDAQ, here's the triple Q's high performance KISS system. And it went long on April 7th there. It's been in this trend the entire time, and you can of course see these mean reversion trades inside the KISS. This latest one closed out today. Very nice trade. But again, overall, the core position from April 7th there is still long with a stop at 548.70. Got pretty damn close on that last pullback over a week ago to break in that stop, but it did not. It got really close, and its system was smart enough to keep that stop just wide enough from being hit. Now we'll see where we go from here. Next, image number 17, here's the 4 time frames. Again, very similar look to the S&P charts. So if we do pull back here after the CPI, let's watch these ATRs in these lower time frames. Notice some DeMarc 9s here on some of these time frames at the recent highs. Next, chart number 18, here's the standard triple Q's daily chart. Again, unlike the S&P, it did make another high, but this high is now setting an RSI divergence. Okay, the last pullback bounced off this demand zone, so we'll see now. We'll see the reaction tomorrow. We've had this negative divergence building for over 2 months now. Also shows you why you should never just trade divergence on its own. You'd have missed this move. You can see you also have the same momentum condition where that last pullback, a week and a half ago, the 60 stochastic has simply bounced off the 80% area. Okay, that's one of those Momo long trades. That's also why one of the mean reversion systems took the, let me pull that up again. That's why those trend pullbacks triggered, was because of that 60 stochastic over the 80%. It's since that Momo condition. Anyway, we'll see the reaction tomorrow. We do have some divergence here, but we have yet to have a major reversal or breaks of support or structure. Next, chart number 19, here's the 2-hour view. Got a little channel here, just like on the S&P. We'll see the reaction tomorrow. Next, chart number 20, here's IWM small caps. They've been a little more choppy here lately. They've been stalled at that supply zone a few weeks back. They bounced off the demand zone just over a week ago, and we're kind of in between areas here. Above the 50-day moving average. Again, we're basically right smack dab in the middle of these major areas. And chart number 21, here's a 2-hour view Steve showed on the weekend, kind of a downtrend channel. So we'll see. This is kind of a break point, just like the website name. We either bust up through here or we head down. Okay. Actually, let me bring up my drawing tool in case I need it here. So kind of like, we either move down or we bust up. So basically a break point. Next, that does it for the major indexes, guys. So moving on to a few indicators. Here's the VIX. So the VIX gave a VIX Bollinger Band buy signal just over a week ago, that previous Friday, and obviously that played out. When it was outside the Bollinger Bands, closed back inside, so obviously that signal played out. Next, chart 23, here's the VVIX VIX ratio. It's a very great indicator when it spikes outside these bands. Tends to give you these very objective buy and short signals. Anyway, this gave an objective short signal in late July when it was outside the bands for that, 2-3 day pullback. All right. Right now, it did rally back up, but it didn't get outside the bands on that last bounce. So not really telling us anything new. Next, chart 24, like I said, week and a half ago when we had that move down below the 20-day moving average, we were very oversold. We were 4 bars below the McClellan NASDAQ was 4 days below its lower Bollinger Bands. I said at the time, my last video, that was due for a mean reversion bounce, and we obviously got it. And chart 25, here's another look at it. Here's the NAMOs, the other McClellan NASDAQ, and you can see it was below its lower bands 4 consecutive days on that pullback week and a half ago. And that's why that ended up being a little low for the market, because that's a rare condition. And that obviously played out. Otherwise, on this new high here on the NASDAQ, we still have a divergence here. Notice the McClellan is still negative. Next, chart 26, here's the 60-minute chart of the VIX. Apologize, this got out of order a bit. Should have been up with the daily VIX. The VIX really likes to fill these gaps. So here, actually it filled this last gap here. There's still an open gap way up here, and that'll likely be hit on the next bigger wave 4 correction. But short term, we got a little gap above as well. We'll see if we fill that or not on the CPI data. Next, moving to the bond market, chart 27, high yield corporate. Remember, this tends to be a leading indicator. And this is another reason why the market popped again. This did not sell off. It just had a minor little sideways move to the 20-day moving average. I mentioned it looked like a flag, and it ended up pushing higher. It's been diverging here, but it has yet to break down anything. Still strong. And chart 28, here's the 10-year Treasury yield, down at 0.3%. Otherwise, this is the bigger picture view, still in the big weekly chart. We'll see how rates react to the Fed. Remember, the Fed does not control the 10-year, the long bond. That is bond traders. So we'll see if bond traders end up, doing what Trump wants or not. Trump doesn't control them, okay? Though I wouldn't be surprised if Trump would say, not to get political, oh, we need to take over the 10-year, 30-year Treasury yield. Anyway, take it away from the bond traders. And chart 29, here's a daily chart. It's kind of this big coil forming. Again, this could react tomorrow as well on the CPI. Moving on, just a few of the sectors. Chart 30, here's XOK Technology. Now, unlike on the NASDAQ, this has not made another high. So it's lagging here a bit. We've had this divergence build. It's possible this could form a lower high, then come down. But again, it needs a catalyst to sell off. Chart 31, here's the transports. They've been weaker, as you know. The last bounce, lower high so far. Basically testing the 200-day moving average again today. Chart 32, XLE Energy, pulling back, still holding this support area for now. Crude oil has been quite weak lately. And here's a chart I haven't covered for a while, guys. This is part of Matt's macro plays. Remember, those are my long-term macro plays that I see developing. So this is the ACI to SPY ratio. That's a world market ETF. And the U.S. markets have outperformed here. SPY has outperformed ACWI since 2008. Look at this. But I do think we're seeing the early stages of a potential macro shift. We have a nice divergence here. Notice here, I'm showing this because it's curling up here a little bit. Again, it hasn't, nothing, this moving average ribbon hasn't changed yet. But definitely got to keep an eye on this puppy. Look at the RSI 50, breaking that. You can see that's 50 area has acted as resistance all these years. If this were to break above 50, to me, that would be a very valid trigger to go overweight ACWI. That's world markets. Next, chart 34, moving on to commodities. Here's DBC. This is the weekly view. Again, we're still stuck in this range here for the last 3 years. No changes. Chart 35, here's crude oil. Lost a little support last week. Otherwise, it's been very choppy here lately. Chart 36, natural gas just continues to melt down. It peaked in early March, and it has been just declining since. That said, seasonality Sometime this fall should kick in and we'll probably see this bottom out again. But again, this definitely is a seasonal type play. Chart 37, copper. As you know, copper made that new high in the tariff and then got smacked hard down. Now it is trying to bounce off a little support. Last week I went long a little CPER just because it was so oversold. So it's bounced a little bit since then. Next, chart 38, DBA agriculture. Gapped up today a little bit, black candle, but the weekly chart is a nice look to it. I'm not showing that here tonight. And moving to crypto, chart 39, here's Bitcoin. So as I mentioned, this pulled back, little ABC pullback the last few weeks, found support here at the previous highs, became support. Also the 50-day moving average in red. On Sunday, I mentioned Bitcoin was up pretty strongly, but it reversed those gains, as you can see. We'll see what it does tomorrow. Next, chart 40, here's Ethereum. Now, Ethereum also moved up nicely. Remember, I've been showing this potential cup and handle on the daily. Did take out some resistance here recently. And chart 41, here's the weekly view. You can see the big pop last week over this downtrend line. Now we'll see if this downtrend line can act as support. And chart 42, here's Ethereum on the weekly as well, but this is a logarithmic chart. You can see this big coil. Now, you can see it's trying to break the coil here, but to me, you know, that's not honestly what I was hoping this puppy would pull back like I'm showing here. Again, best to watch the video, guys. But it's not doing that. Now, it doesn't mean, though, that it's not going to go up here and then come down. Remember, you could also adjust this upper trend line and make it more of a horizontal one. So we'll have to see how this fleshes out. But this is part of Matt's macro plays because I think Ethereum has a much bigger potential over Bitcoin now because it's essentially been coiling here for 4 years. And chart 43, here's ETHU. That's Ethereum 2X ETF. And man, this puppy's moved. I mean, look at this, guys. This thing has rallied over the last week and a half from $100 to $150. So 55% in just a week. That shows you how quickly these things can move. Next, chart 44, US dollar. US dollar, remember, it was in this downtrend, finding resistance at the 50-day moving average, pulled back. I was watching for a higher low there from our MACD KISS setup. And then we got a pop. We popped over the 50-day. Pulled back. Now we're below the 50-day, but I've been looking for another higher low. Now it's off the highs here, but it is trying to bounce. Really, the better way to look at it is the ETF at the moment, UUP. You can see these higher lows. I've been long call options on UUP, so we'll see if this can continue up. If the dollar continues higher, that's going to put pressure on gold. So let's move on to gold. So chart 46, here's gold. Nice sell-off today, down 1.7%. It's still in the coil here, guys. It could go either way. A positive here is the stocks have been stronger. This is measured via the GDX-GLD ratio. But again, this could go really either way here, right? So nice reversal today. Ooh. Next. Chart 47, here's the other daily version of gold, this coil that I've had labeled. Again, the bullish view would be this in blue. We're eventually going to break to the upside. The bearish view is this ABC. I've been kind of slightly favoring this ABC. We'll see if this ends up working. If the dollar rallies, then that could happen. And honestly, guys, gold hasn't retested the 200-day moving average in a long time here. So on a breakdown, that would be a good target area right in here. So we'll see. Next, chart 48, here's the weekly view of gold. Again, remember, part of Matt's macro play, I was bullish on gold in early 2024 out of this base. Went parabolic. You can see the coil here forming now. We either have wave 5 here, or if gold does break out again, wave 5 shifts over to here. Next, chart 49, silver. Bounced, a couple weeks ago off the 50-day moving average, but so far we got a little lower high here near the 61.8 fib. Chart 50, his SLV ETF, same analysis applies. And chart 51, GDX, the miners, they broke out of their pattern recently. They've had a nice move. Now you got a little warning late last week from that black candle doji last Friday. It did gap down today, but so far bounced near that 9 EMA. We'll see the reaction. We'll see how this looks tomorrow. And following up on some of the individual names that I've put out. So RGLD was a gold miner play output out a couple weeks ago near the 200-day moving average. And it's had a nice pop here. So congrats if you caught that. Some others, Sharper at 53 AEM. This has been a nice move out of this coil. That's one of the major gold stocks. Sharper 54 AU, another one popped out. You can see pulled back a little bit today, but still looks okay. And the other one I put out was FNV. Had a nice pop. And you can see the big recovery today. So again, we'll see how these react tomorrow, guys, and we'll see how gold ultimately reacts. And the final part of the newsletter, let's look at trade ideas. So let's cover a few of these Matt's macro plays. So Remax. So this is the rare earth ETF that I put out in June. And on that last pullback to the 20-day, I was thought that this might form a lower high, but it just kept going. It made a new high today. Now you got a big spinning top doji here, so with some MACD divergence there, so a bit of warning now. But if you held on to it, congrats. Okay, this has been a heck of a rally from this June time frame when I was bullish on it. And here's the bigger picture view, chart 57, the weekly view. Again, I put this out in mid-June out of this nice wedge pattern from the weekly demand zone. Everything was set up there perfectly. So your trigger is around the $40 level, and it is now $57.50. So anyway, should it continue higher, your next demand or your next supply zone is up into here. But remember, this is a longer term play. Chart 58, lithium, global lithium. I put this out in June 1st, Matt's macro, when it was breaking or starting to break this weekly downtrend line. And this is at a nice move. And today it was up 5.5%. So if you've been long this, congrats. Next, chart 59. Here's another one that I may add to Matt's macro play. Talked about it late July. This is MP. Remember, another rare earth. Apple did a big investment into it about a month ago, and it's just continued to move higher. Now, it's very overbought now, guys, but on a good consolidation, I would potentially look to acquire this again. So one to watch going forward. And here's the weekly view of MP. Again, guys, if you haven't been long, if you bought this when the Apple news first came out and you wanted to give it room, that's fine. But definitely not objective to enter it here. But on a good consolidation, maybe some sort of ABC, that could be a great entry. Notice the MACD is very healthy. There's no divergence or anything. But again, it's very overbought here, guys. It likely needs to work off, but this is one we're going to monitor. Now, guys, let's move on to some other trade ideas. So chart 61, Tesla. Been showing this for a while. So Tesla finally broke out of its coil and following through today a little bit. It looks pretty good here. Chart 62, Sound. This is one we've been talking about, one of these AI plays. So if popped on Friday, big gap up, and if you kept your shares, boom, big pop today, up 17%. Again, all the action's also been on these AI plays, guys, quite honestly. Chart 63, CTGO, Contango, one of the recent long ideas. Steve put this out last week. Big pop today. Look at the volume. MACD is just crossing, so this looks really good. Chart 64, CRWV, another one from Steve last week. Nice pop-up. Triggered last week over the downtrend line. Nice move. Chart 65, KTOS, was a long idea of mine a couple weeks ago. But again, if you guys gave it patience, because remember it popped initially to 62.80, pulled back, but I said it still looked fine. Well, it's back up. So sometimes, guys, you just have to have patience. If you overreact to every little wiggle, you're going to stop out and take losses needlessly that you shouldn't do. So this played out just beautifully. I do think Steve, once in a while, since he's more of a shorter-term trader on these type of items, he might do that. But, if you have a bigger picture on some of these swings, you could do much, many times they work out if you give them logical stops. Next, chart 66, CDZI was a long idea of mine over a week ago. It popped last week out of the tight coil. We like these coils because energy's been pent up. Chart 67, Goss. This was a great long idea over a month ago out of this cup and handle. Only reason I'm showing it now, guys, is because if it gets down into this area, around the 155, could be an area to buy it again, retest the previous resistance, become support. Chart 78 or 68, Zeta was a nice long as well out of this coil. It simply gapped up. If you really need to be long inside the coil, but I do like this potential breakaway gap, so I'm watching this pullback here on the lighter volume. Chart 69, ATLX was another nice one that popped out of here. Still looks okay here, guys. The volume patterns are still good. Another lithium play, Atlas Lithium. Chart 70, QS, Quantum Scale. Remember, this was one of those beta stocks. We had it as a long back here in June out of this coil. Man, it popped up to 15 from the 4s. That said, a little bouncing here lately, but if it sells off again, I'd be a buyer in this demand zone down here. Chart 71, Baba, one from Steve last week. Never triggered. It's still valid should it try to get over this downtrend line. And chart 72, PPTA, another one from last week that never triggered. Still looks okay, trying to flag off the 20-day moving average here. Resistance is around this 18. All right, guys, we'll see what happens tomorrow. Futures right now, ES futures are up about 5 points. So, again, the action will be tomorrow on the CPI. We'll see what it looks like. Have a wonderful evening. Thanks for your support. And, guys, on YouTube, please, please subscribe, like, comment. That helps out the channel. That helps out the YouTube, algorithm. All right, take care.